Friday, November 4th, market analysis, Stan Ehrlich. Good morning. Currently almost 10 o'clock California time in the middle of the day, and we have had a rock and roll day today already, and the day's only half over. As always, I start out with a spider, and I'm going to be looking at the indexes in general, then at futures contracts as well as forex, and I've started looking at sector symbols in the last few days that are very interesting, providing me some really good signals. And they're sector symbols. So that means there's a whole bunch of issues, stocks behind the sector symbol. Okay, let's start out here. What have we got? We got unchanged on the spider. After, this is very important, the market opens above the gap that happened yesterday on the downside, which did some damage to the bottom formation that occurred in October when the October lows occurred. The October 13th bottom was a gigantic bullish engulfing ER buy signal. I'm a little disappointed it didn't work more than just the 2 weeks that it did work, and it worked very nicely. There was a very nice bull move, but I thought it was going to go up to 403 to 410, and that's pretty much out of the picture at this point. And now I've turned bearish because of the bearish engulfings that we have had 3-4 days ago, and the big down day that we had on Wednesday. So Thursday downside follow through, but created a gap. Gaps are almost always closed. This morning, we didn't close the gap. We gapped above the gap between Wednesday's low and Thursday's high. Right away, after being up about 5.6 points, we dropped right back down to close the gap. And now I'm going to look at the 1 minute for you. And here we go. Open sharply higher above the gap area that's right in here. Came down almost to unchanged, closed the gap, went right back up again to make a new high for the whole day, and then turned around and made a new low for the day and got lower than the previous day's closing price. We are now currently up a very small 0.44, going sideways for the last 20 minutes or so. I think this market is going to fall apart. Sorry to say that for you guys that are long and can't do much about it. But that's my opinion, right or wrong, and I certainly have been wrong at least once this year. Ha ha ha. So I'm looking for this market to make a new low, and very soon, today, lower than yesterday's low. Now, in the next few days, next week, I think that the S&P can come down easily into the mid 360s, 365 and lower. If it can get down to 357-ish, there's no real support left. That's the last vestige of support around the middle of 350s, 355, 67. There's only one low, and that's the October 13th low, the October low. It's the low for the year. And if we get down again to the middle 350s, I do not expect a double bottom. I do not expect it to rally back up. I will be looking for new lows for the trend. And my bearish opinion on this market since very early this year, maybe in January, but February, March, has been all along 320. The last stage of a bear market is typically a very hard, fast, crashing type. Capitulation is a word used frequently. Gasping type of bearish activity. The old phrase is people are jumping off the buildings because they think the market's never going to turn around ever again. Well, of course, that's ridiculous. In fact, when you see these types of price action and you hear that type of rhetoric on CNBC or the major news networks, CNN, etc. Get your buying helmet on. Get ready to be a buyer. You want to hear everything disastrous you can think of. That's the sign that you're about to have a bottom in a significant bear market. And I think that's going to be around the end of January, beginning of February. I'm not good at long-term forecasting, so take that with an extra big grain of salt. But for the moment, we are now down on the day a few ticks on the spider, and I think it's going to fall apart. The DIA is barely higher. Let's go look at some of this other stuff real quick. The DIA, remember, had a double bottom. It did not have the head and shoulder like the S&P and the QQQs did, but it didn't work completely in the S&P and the QQQ. They did work, let's say, halfway, maybe a little bit more, and then they failed. And the QQQ is much, much closer. We'll look at that in a minute, to the lowest low for the year. The DIA has held up better, but ladies and gentlemen, we just got clobbered on Tuesday and Wednesday with two bearish engulfings that were in overbought territory and outside down days, officially ER sell signals back to back. You don't see this very often, especially in a major index like the DIA. If months from now this is still a high, and I think it will be, it'll go in my historical references to what to watch out for. And I'm serious about that. The high today in the DIA just barely missed my new short sale trigger price. Came super close. Now I like that, but I wished it had hit the red dots, and then officially the ER signal trading technique would be short. Remember, it's a 100% automated, mechanical. You don't do a thing. You lease it month to month, and you sit back with a cold beer and watch what happens. It's got a good track record. So I'm looking for this to drop off, make new lows lower than yesterday's low, I think today. And there is a gap to close around 311.50. I think it's 1140 to 1160 to be more exact. And that, I think, is going to close easily, not necessarily today, but probably next week. And it's just going to keep coming with the usual modest, small, short-term, not lasting very long rallies in a bear market. And it may take a little longer for it to make lower lows than the October lows. But I think, again, just like the QQQs, which I'm now going to show you, and the spider, it's going to make lower lows. That's my opinion. The Qs have already made it lower than yesterday's low. They have, at the moment, an outside trading range day that's lower by a few ticks. That could be another nail in the coffin, so to speak, if it closes lower, and I think it will. We are, if we close here, at a new low close for the year on the QQQs. Yesterday was barely a new low close for the whole year already. Yesterday, the Qs, like the DIA, well, I don't think it did. The S&P did. It left a gap behind yesterday. So what did the Qs do? They open higher. They close the gap right away in the opening, and then they start dropping below yesterday's low, completely finishing the job, closing the gap, and failing to hold. That's not the way bull markets act. Bull markets, tend to hold at certain levels and start to make new highs again, pretty obviously. So, bearish engulfing at the moment, or actually up 20 at the moment, so an outside up day, which I don't think is going to hold. We're not oversold, so it's not going to be an official buy signal. I don't think that's going to develop. And that's it pretty much for the stock market indexes. I think you need to strap yourself in, put your helmet on, and watch out. This market's going to come down and crash soon. All right. Bond futures. Unchanged for the moment for the 10-year notes, down slightly. And bonds are down a little bit more relative to the close of the previous day. Nothing particularly profound here. I might mention that the 10-year notes have a little bit of a higher high and lower low, so it does have an outside trading range, but we're not oversold, and we're not going to get a bullish engulfing that is an official buy signal. I think we're going to see lower levels on the interest rate futures contracts soon, and that means higher actual interest rates. I'm not looking for any kind of a huge move down here. I do think that we're in the very, very early stages of a base building activity for interest rate futures, but we do have lower levels to accomplish, and I didn't want to do that. So let's go to futures. I'm going to scroll through these charts pretty quickly. These are the popular futures markets that are traded, and some that aren't all that popular, but nevertheless may be giving me an idea as to what's going to happen next. We're overbought, so it could get a little more overbought. The trend is up. I wouldn't be too anxious to go short, but heating oil looks like it's got some more room to the upside. Bull trend, a little bit stronger next few days. Next, crude oil, trying to make a new high for a couple of months. Looks like it might. Trend is starting to turn up, not very convincingly quite yet, but there are several things that indicate that. The bear trend line's been broken. We now have a new bull trend line that looks pretty decent. We're starting to see higher highs and higher lows. All that looks like trend is starting to turn to the upside. Unfortunately, we didn't get a buy signal at the very bottom, but we did get oversold. That's one of the criteria I need in order to come up with a decent opinion that's right often enough. Next, silver, sharp rally, creating an overbought condition today. Not much, but a little bit, and maybe starting to turn around. Again, we're starting to see higher lows and to some degree higher highs. So I'm kind of neutral at the moment on silver because it looks like it should pull back in the same range it's been in since July, and it may be building a bottom. Can't be too sure. There's something that looks kind of like a head and shoulder bottom in here with a neckline that's slightly upward slanted across these two highs, but this is out of place. The low we had on September 28th. It doesn't necessarily kill it from being a head and shoulder bottom. Let's see what develops over time here. Next chart. Gold. Triple bottom is now possible. New highs for a few days. Triple bottoms are very rare. Yesterday I said I didn't think that was going to work out. Now I have to change my mind slightly. I'm neutral at the moment, but I'm flip-flopping from being decisively bearish. I was expecting it to just break down today completely. That didn't happen at all. And it rallied pretty strongly. So I'm now fairly neutral. But the trend is down, and triple bottoms are rare. So maybe it'll take next week to the week after until it makes a lower low, unless the rally is really strong. And that would mean starting to close above 1740. Next chart. Bonds, we've looked at that already. 10-year notes, we've looked at that already. This is the YM, the Dow Jones futures, which did have a double bearish reversal, key reversal situation, just like I showed you before on the DIA. We had just barely missed the new short trigger price with the strategy, ER signals strategy. I do think it's going to head south, and I could be very quickly. So bearish, definitely. Live hogs, kind of neutral, little bearish, getting close to oversold, not quite. Really don't have a strong opinion here. Next, E-mini, well, it's the S&P. You know what I'm thinking, down, down, down. We're now down 12 at the moment on the spider, up 17 at the moment on the DIA. These are extremely small numbers and can change, will change to higher or lower in a matter of literally a few seconds. Well, there you go. It just jumped to 35 higher in the spider, 40, 50. Ooh, that's a pretty good rally here, 60 in a matter of a few ticks, 70 higher on the spider. That warrants taking a quick look at here, real time. Let's look at my option page here for a second. Yeah, that's a nice pop-up. We see it almost made a new low for the day. Almost got oversold. So I'm not minding this too much. I just don't want it to get over 373. And it's 1 3/4 at the moment, so I don't have a lot of elbow room. But what I can say is this is really a Mexican jumping bean today, moving up and down very quickly, very sharply. One of the reasons I said strap your helmet on. And I think the direction is going to be down. Okay, let's go back. Commodity futures. Orange juice overbought, probably topping out very shortly. Wheat neutral, corn neutral, platinum neutral, cocoa getting a little overbought, big sideways trading range up against resistance, probably going to pull back down mildly very shortly. The high grade copper also popped up this morning quite a bit, but not quite overbought as yet. I see the spider just jumped up 1 point higher for the day for a moment, 371.90-ish. So keep an eye on that. I'll remember 373 is my momentary important point. So high grade copper probably going to slip back down some. Next, soybeans overbought the last couple of days, slightly higher high today. I think it's not trending yet, neutral. Sugar, sell signal a couple of weeks ago worked out real well, all the way down to oversold, bounced up really nicely from oversold, sideways trading range for the last 2 months, relatively neutral. Natural gas, neutral. Soybean meal, not much to say here, also neutral. Bean oil overbought like crazy, so it's probably going to top out real soon. I think I have been saying that already for a few days, and it's already made new highs. So I haven't got a sell signal yet, but this is prime territory for one. We're also in a resistance area. So I'm looking for a turn down. Coffee, I said the exact opposite a few days ago, and it turned up some, not a lot. I'm friendly, not particularly bullish on coffee, but I think it's going to make a little bit of new highs soon to test overhead resistance. The long-term trend seems to have turned down. Next, rough rice, resistance, overbought, probably not going to go much higher and start to slip, make new lows for a few days and have a small bear move. Next, oats, neutral. Next, live cattle, a little bit bearish. Heating oil, we've already looked at this. New highs, but overbought. And we've gone round turn all the way around. So I've looked at all these futures contracts. We have the sector symbols. I told you we started on this a couple of days ago, 4 days ago or so. We have a bearish engulfing that worked for a couple of days, and it's up today. But I think it's going to see lower levels on KBE, and that's the banking sector. SMH, the sector, same kind of commentary. XLK, and I don't really care what sector it is, by the way, people. If you want to know, look up XLK and find out and see if there's something that interests you there. But this got up to a little double top, had an outside down day, broke sharply on Wednesday, gapped down on Thursday, and we have another bearish engulfing right now, a couple of ticks higher day at the moment. Same kind of commentary as the stock market index. It looks like this thing can drop off fairly sharply. This was XLK. So XLU, same kind of thing, not dropping very quickly. XLY, almost a new low ground, and it did have on Tuesday that outside down day. That was my key that we're going to drop lower. And ITB came up, closed the gap this morning from yesterday's downside gap, had a bearish engulfing at the top. It wasn't red because I wasn't overbought for those particular symbols, but watch this. The next 6 symbols, ER, bearish engulfing signal at the top. We are short today because it came up and touched my trigger prices, the red dots. We're short at 34.01. Next. Oops, I have to do this. Next. Outside down day on Tuesday. We are short on Wednesday, and we're still short. Momentarily a little higher, even though it rallied quite a bit this morning. Next symbol. That's 2 now. We've got bearish engulfings and a big decline after. 3 now. We're not short, didn't hit the red dots, but it's coming down, and I think it's coming down more. XOP is, oh, it failed. The bearish engulfing I got on Wednesday has a higher high today, which kills the signal, and now I don't have much to say except, oops, sorry. Small loss on this, and I don't know what to say. I have to wait for new signals. But we did have a bearish engulfing. That's why I'm showing it to you. But it didn't work. They don't always work. There is no trading system that makes 100% profitable trades. XTL. Wow, that's a great one. That makes up for the goof I just made a moment ago. XTL, big move down. Interesting. It just closed an old gap from a couple of weeks ago. And, well, it's not really oversold yet. So maybe it's overdoing it a little bit on this break. It left a gap behind above the market from Wednesday's low to Thursday's high. I'm looking for lower levels, but there could be a bounce in between here, making new lows. But definitely I'm still bearish. And lastly, XLI. Got short yesterday, still short. At the moment, slightly higher. We're not out because it hasn't made a higher high. And I leave you with that one except for forex. We got the bottom of the euro dollar. Unfortunately, I'd rather see it go lower personally because I love to go to Europe when I get the chance. And I think the euro dollar's hit a low, and it's going to rally probably up another 2, 3, 4 points during the next month or two. The exact opposite for the dollar index. It's hit a high, bearish engulfing, was overbought, outside down day or bearish engulfing at the top of the market. Going to come down some more in my opinion. That's it for today, Friday the 4th of February. It's a very volatile day. Be careful. Always use a protective stop, which old phrase is a stop loss. Never get into a trade without deciding what your risk factor is in advance, which is exactly, of course, what my strategy, automated, 100% mechanical ER signal strategy does. Have a great weekend. See you on Monday.